Greetings and salutations. Thank you for lending an ear to the voice of the times this Monday, November 15, 2021. For today's editorial, positive developments happening at LandBank. Two major changes are poised to happen at the LandBank of the Philippines, or LandBank, and if they push through, the public will likely reap the rewards. In a recent proposal to Congress, LandBank suggested amending its charter that would allow it to float 30% of its shares in the Philippine Stock Exchange, or PSE. For now, the bank is wholly owned and controlled by the government, although it has been authorized to distribute common and preferred shares to groups representing small farmers and fisherfolk. The suggestion to privatize was LandBank's counterproposal to a bill filed in the House of Representatives to reorganize that financial institution. If allowed to sell shares, LandBank can raise private capital to bolster its competitiveness. This would also enhance its capabilities to carry out its mandate, part of which is to spur rural development. We like this so much that we hope other government enterprises as well as private companies with public interest will also decide to be listed. Public listing favors good governance because of the transparency required, mainly through public disclosures, mandated by regulators, and the scrutiny by shareholders and prospective stock buyers. For Filipinos with excess funds, privatization is an opportunity for them to become part owners of LandBank by buying its shares. It promises to be an attractive stock to buy because the bank will continue to enjoy the backing of the Philippine government that will retain a supermajority under the current privatization proposal. In other words, LandBank shares will likely be perceived as a safe investment. Any asset with a shroud of security is desirable, especially during these turbulent times. But even before the COVID-19 pandemic, people were drawn to good investment opportunities to preserve or grow their wealth. Also, LandBank's proposal to list will benefit the PSE. By offering attractive investment opportunities, more Filipinos might consider buying equity as an alternative to parking their money in savings accounts that only offer very little interest, or to spending their cash on goods that depreciate. Merger underway. The other interesting development is the looming merger of LandBank and the United Coconut Planters Bank, or UCPB, which is a government-controlled financial institution. The merged entity will be known as LandBank, which is the larger of the two. After the merger, LandBank will grow in terms of assets and deposits. Its president, Cecilia Borromeo, said this earlier in June. With the merged resources of LandBank and UCPB, we can bring closer to the farmers our services, as we are able to tap a combined total of 722 branches and servicing units, including those in the provinces. She added that, "Our goal is to ensure that we are able to efficiently manage and protect government resources in these banks for the ultimate benefit of the Filipino people. With the merger, we will be in a better position to grow our loan portfolio in order to meet the needs of the people, especially the unbanked and underserved Filipinos. An integration plan is reportedly being drafted. Afterwards, a technical working group composed of executives from the two banks, along with other government officials, will review and approve the details of the merger. We hope to see that plan sooner rather than later." As this pandemic reminds us, unexpected things can happen. In 2016, LandBank was planned to merge with the Development Bank of the Philippines, or DBP. If that had pushed through, the consolidated bank would have been the second largest financial institution in the country in terms of assets worth about 1.71 billion pesos. But the incumbent government aborted that plan, explaining that the mandates of LandBank and DBP were too different and incompatible. LandBank and UCPB seem like a better fit, with the welfare of the agriculture sector as their common interest. Once merged, the two institutions will have combined assets worth nearly 3 billion pesos, transforming the merged entity into a serious competitor in the banking industry. With more resources after the merger, LandBank can serve its clients and other stakeholders better. And when competition intensifies in any industry, customers usually come out ahead. And that's editorial for Monday, November 15, 2021. For more news and information, get a copy of the Manila Times on print, subscribe to our digital edition, or log on to www.manilatimes.net. Follow us on Twitter, Facebook, and Instagram, and listen to The Voice of the Times.